Let's bring in David Rosenberg, founder of Rosenberg Research. And I read your note today, David. You were talking about how the U.S. economy's potential is stronger than we think. There are buying opportunities. Are you becoming a little less negative about the prospects for the economy and the market just when everybody else is becoming more negative?
No, I wouldn't say that. But, coming out of the storm, as you said, there are buying opportunities in select parts of the stock market. And I think that, obviously you want to, reduce your cyclicality and become more defensive. But, there are areas coming out of this. Defense, for example, I would say anything that's not correlated with the economy and isn't sensitive to what's happening in this Russia-Ukraine disaster. You could talk about pipelines, you could talk about telecom, you could talk about healthcare. I would even say, some of the more defensive growth characteristics of the tech area, software, for example, these are areas that actually, I think, make a lot of sense, over and beyond, obviously, oil and gas. So the commentary was that, you want to raise cash, but you also want to be in the parts of the market that provide you, safety and value. And even some growth stability. Those are few and far between, but they still exist. And that was really the major point of the report I put out.
Because we are going into a period of what? Stagflation? Slower growth? Higher inflation?
Well, everybody talks about stagflation, but, what does it mean? When we had stagflation in the 1970s, we had double-digit inflation and we had double-digit unemployment. So I think there's a lot of hysteria over the term stagflation. We don't have double-digit unemployment, and although inflation is obviously elevated, it's not double digits. So I don't think this is a stagflationary environment. I think that what we have in our hands has been a massive supply shock. We had the pandemic and all the impact that had on the supply chains. Of course, I would say that the inflation really took off, Sarah, exactly a year ago when the supply chain issues bumped against Delta. Then, of course, we had Omicron, but then we had really a massive fiscal stimulus package at exactly the wrong time that exacerbated the demand-supply imbalance. And now what we have a situation, you look at the commodity prices right now, it looks like a hockey stick pointing north. So that's the inflation we're dealing with right now. I would still say that it's principally cost push, supply-related. And you're asking me about my view on the markets. I don't remember a time, and maybe you can correct me, where the Fed was raising interest rates into such a period of geopolitical instability. I don't remember the Fed under Greenspan raising rates in 1990 under Operation Desert Storm. I don't remember the Fed raising interest rates, and it wasn't a war, but we had major geopolitical and financial risks coming out of the Asian crisis in 1998. Don't remember the Fed raising rates then. 2003, Iraq War II. Did the Fed raise rates then? No, it didn't. So we're in something totally brand new here. And so that's one of the reasons why I'm reluctant to say that I'd be turning bullish in such an elevated period of uncertainty. And on top of that, the Fed is going to be draining liquidity. So it's going to be very challenging for the stock market. This is not over yet in terms of, I would say, not just the weakness, but the volatility is going to be with us for some time.